Well, hello, traders and investors. My name is Roger Scott. Today is Friday. Thank God it's Friday, August 28th. I believe Monday is going to be the 31st, going to be the last day of August, and then September, the fall is here. Now, I'm going to ask you guys, remember when the pandemic happened in February? What has happened to that period of time between February and now? Either I've been working too hard or it's just the markets have been moving too fast, or I've been just too busy because that period has just flashed by. But anyhow, we had GDP yesterday. We had income yesterday. The numbers were so-so. Nothing really crazy. More in line with what's expected. Down close to 30%. I mean, we saw positive 2%. Now we're looking at negative 30%. The numbers were overwhelming. As a matter of fact, if we take a look at it, here's what the GDP looked like. Let me show you the outcome. The expectations was negative 33 to negative 31.6. We had 31.7. Not very good. Not very good at all. The bottom line is anywhere near this territory is just horrific. We're off by a third. We were positive 2%. Now we're negative 30%. Very, very bad. Jobless claims, on the other hand, were not bad. They were in line with estimates. Remember what I told you, as long as we're in line with the 4-week moving average, we're okay. We're at about 1 million right now. Anywhere from 925,000 to 1.1 million would be reasonable in light of expectations. It's definitely not reasonable, but in light of expectations. We went from the lowest unemployment in 50 years to the highest unemployment since the Great Depression. It's terrible. But my key is, my take here is, I'm looking for the 4-week average. And the 4-week average is like at 1.175 million, and we came in a little bit above 1 million. So I am okay with that. Now, today we have personal income. And again, the numbers are just not that great. I think the sentiment is looking for negative 2% decrease. So we're looking for a 0.2% decrease. It would be interesting to see if we saw personal income increase 1.2% or higher. But again, I'm showing you what the expectations were. Last time personal income was down 1.1%. The consensus now is 0.2%. So we are looking at anywhere from negative 2% to decrease to an increase of 1.2%. The bottom line is personal income numbers are just not going anywhere. Let's look at the global markets, global economy, and then I'm going to give you, because it's Friday and you guys have been really great this week, I'm not going to give you one, I'm not going to give you two, I'm going to give you 3 stocks to look at. If you want the entry, exit, and stop loss, you're going to have to sign up for one of our programs. But I'll give you the stocks so at least you can start watching them. And trust me, they're juicy ones. So let's get into the world economy. World markets were mostly higher overnight. I think the Dow's up about 140 right now. After Federal Reserve Chair said U.S. central banks will keep its ease money policy even if inflation hits its 2% target. Wow, I want to kiss this guy right now. I want to kiss the Federal Reserve. That is great. That's very positive. What they're saying is even if we go back to the same level of growth, they're still going to be giving us money. They're still going to be putting money. They're going to give us cash. They're going to influx of capital is not going anywhere. So that's very, very, very positive. We'll keep. That's the key. We'll keep. All right. Shares in Japan retreated after Prime Minister Abe said he's resigning. I didn't know that. He looks. I mean, Japanese people tend to age very well, so he doesn't look sick. But again, I have no idea how old he is. He's, I think, the longest running prime minister. I'm not sure about that, but I think he is. Hopes for change in the federal strategy is important for markets that have been rescued by central banks slashing short-term rates and buying bonds like there's no tomorrow. Overnight, the S&P ticked higher, moving into record territory after Federal Jerome, in his speech, said central banks might keep interest rates low to help prop up the pandemic-ravaged economy, even if the inflation rises above its 2% target. Talk about being accommodative. I mean, I love it. That's cool. That's great news. Because you know what? It's easy to say, hey, if we get back to the same level we've been before, we're going to keep it off. They're standing behind the U.S. market. They're standing behind the global market. Honestly, truth to be told, they don't really have much of a choice because this pandemic is just eating up the economy. Japan, the third world largest economy, has yet to see inflation hit its 2% target initially set by the governor. On Friday, the government reported the consumer price index rose by 0.3 in July, down from 0.6. Yeah, they're nowhere near there. Abe stepped down from a brief earlier term as prime minister in 2007, also for health reasons. He recently became Japan's longest continuously serving prime minister. Yeah, so I was right. And again, crude oil, we're in that area right now. Again, this is important. I talk about this every day because it's really important. If crude oil dips another $1, maybe another $2, then U.S. companies like ExxonMobil, Chevron, they're going to start bleeding because they pay around $40, $41 for a barrel of oil. So they're not really doing great right now, but they're not bleeding. And while I'm here, let me take a quick look at the put to call ratio, because with the market going higher, it should, yeah, whew. Folks, I'm telling you right now, we're at 62 right now. Let me show you something. The put to call ratio never ever lies, and it's telling us right now that we're overdue for a little pullback. I'm not kidding. The markets are extraordinarily bullish right now. Extraordinarily. Look at this. Whenever we go to 65 or lower, even 70 or lower, we tend to come back down. That means there's too many bulls in the market. When we go above 120, that means the market's getting bearish. Look at the sentiment here. Look at the highs. Notice the highs have been going lower and the lows have been going lower. That means this is inverse. So lower means more bullish. Higher means more bearish. When we get to a certain point, the markets, that's just investors just throwing money into the economy. 62, that rubber band, folks, it's as stretched out as stretched out can be. So expect, especially technology and consumer discretionary, to cool off, which leads me to the next section. This is the top 10 sectors. There's usually 11 sectors. I don't put the communication sector in here because that's just technology and consumer discretionary. Whenever you see technology, you should see consumer discretionary next to it. If not, that means markets are becoming fragmented. They're not fragmented yet, but let me tell you what's going on. I'm looking at my average. This is 6 month, 3 month, and 1 month. And if you look at the 3 month average, look at the sector, and don't tell me this is a surprise, because I told you that this was going to happen 2 months ago. Basic material, industrial, consumer staples. These and utilities are the three most defensive sectors. Technology and consumer discretionary and healthcare are offensive sectors. I don't mean offense, aggressive sectors. Growth, they move up when markets are moving higher. But basic material, industrial, consumer staples, that's defensive. And basic materials is now in third spot. And if you look at the average, they're really moving up there. Now, this cumulative strength index is pretty accurate. Now, when I start looking, I go to my S&P 500, right? I'm showing you how I do my analysis. So I know that basic material is heating up. I do my analysis. I go down and look at this. This is the S&P. This is 500 stocks. So even if I was to go down all the way down to this page, I would still only hit the top 10%. But we don't have to go all the way down. Look at power, PWR. All right, that's this stock right here, Quanta Services. It's been basing. Look at the profile of this stock. It's industrial stocks, industrial basic materials, leading specialized contracting service company. This is a defensive company. Look at the returns. They've been fantastic. 5-year return, 115%. 5-year revenue, 54%. 5-year earnings, 62%. Very, very solid. You can even see EPS growth versus previous quarter versus previous year. Industrial, defensive stocks. So we've got power, right? Let's continue looking. We got Rollins. Look, what does Rollins do? Look at Rollins. It's breaking out now. What a coincidence. Let's look at profile. Industrial. You see that? Industrial. Premium global consumer and commercial service company. Industrial stocks. You see that? 5-year return, 5-year revenue, 5-year earning. Even dividend growth is great. Look at the EPS growth from previous quarter, previous year. And most importantly, look at the technical stocks. Basic materials is industrial stocks. There's a lot of basic material stocks in it. Industrial stocks go up, basic materials goes up, defensive sectors go up. Again, look at this breakout. Nice congestion, moving into a breakout, ROL. Let's continue. Let's continue. And look what we have here, Deere, DE. And look at this breakout. Nice. Now this one you may want to wait for a little pullback. And again, I'm not giving you the entries and exits. I'm just pointing things out. Industrial. All right? Industrial. Industrial. So when we go to the 10 sectors, look at industrial. If you look at the 1 month period, where's industrial? It's right here. On a 1 month basis, industrial is right behind consumer discretionary. So on a relative strength basis, you've got basic material and industrial right here. On a 1 month basis, you've got industrial right here, the third spot. It's budding consumer discretionary. And folks, I'm going to tell you right now, with the put to call ratio extremely overbought and with the NASDAQ 100 narrowing momentum, we're going to see a pullback in tech and consumer discretionary, which means we're probably going to see upside in industrial stocks. And Rollins stock, Rollins, ROL, look at that nice little base. Deere, and these are all solid companies. Look at that. I would wait for a breakout, pullback, right to the 195-ish level, right around back here before getting in. But again, I'm not giving you the entry and exit. I'm just giving you the stocks. And power. So we got power, Quanta Services, PWR. We got Rollins, ROL. Look at that. I love this congestion. I love this congestion. Rollins, power, ROL, PWR, and DE. But DE, I think, is a little overbought right now. But again, look on a 1 month basis where industrial is. And on a cumulative basis, look where basic materials and industrial and consumer staples are. These three sectors move together at the same time. So I think I've said enough. I just gave you three really good stocks that have the potential to move higher in the next quarter. All right. Now, keep in mind, I'm not giving you the entry. I'm not giving you the exit. I am going to give it to our premium members later today. But at least I gave you three hot stocks. And I showed you the sector that they're in, and I showed you my logic, the put to call ratio, and all the other good stuff to get you into the right frame of mind and understand how I come up with my picks. Now, I kind of went over it. I mean, this is a 10, 12, 15-minute video, but generally speaking, I use a top-down approach. I go to the sectors, I go to the stocks, so forth and so forth. I peel that layer. Now, folks, I've got some shocking news for you today for Friday. Famous trader and hedge fund manager Tom Busby and I figured out how Wall Street really trades. I know that's a bold statement, but we've done it. Hint, they don't use fundamentals, and they certainly don't use technicals. By the way, in this example, I didn't use technicals. I used momentum, just FYI. Instead, they use the secret tool that allows them to trade with 100% certainty. That's right. With it, Tom and I have scored monster gains of 168+%, 31+% on two trades, Sherwin-Williams and Apple, respectively, in the past 60 days. And we've had 10 winners, 1 loss, and a scratch. Can you imagine? We've also over-delivered trades by 50%. Luckily for you, a new trade's about to skyrocket. We're going to give you the ticker symbols. We're going to give you all the goodies. Don't wait another minute. Click the button below to get in on the next trade. Do not miss out. Tom is brilliant at what he does. Do not miss this opportunity. And most importantly, PWR, ROL, DE, don't miss this opportunity and have the best, most amazing weekend ever. Bye, folks.